following content is a technical analysis on Verizon Communications and AT&T, two of the largest components to the communication services sector and telecom services here off the monthly interval. Well, we had some big headlines shock the pre-market today, with Amazon currently in discussions with AT&T and Verizon to find the most cost-effective wholesale option available. With their aim is to provide wireless plans for Prime members at a monthly cost as low as $10 or potentially even for free. Apparently, they clarified that there are no current plans to introduce this wireless service. It is important to note that usually, in my experience, when a company or government states that they have no plans for something at the moment, it does not necessarily rule out the possibility in the future. In fact, it can often indicate that the plans are already confirmed and can be expected soon. The development by Verizon might potentially agitate Democratic leaders who frequently raise concerns about a lot of these antitrust issues. Whether it happens or not is going to significantly impact what we see here on the charts. And from a technical analysis perspective, we are at a colossal, massive key inflection point here off this primary uptrend line off the great 1987 flash crash in October lows. Cuts right through the 2008, 2011 crash there, 2022 crash, and just a key inflection point coinciding with the 34.40 price support. Call it a dual line of support. And just today, right off the pre-market news, that was a 7% crash. Ended up getting bid up slightly, closed the day on a 3% crash here. And bull traders, dip buyers need to really come in to defend this key inflection point really at all cost. Again, just a dual line of support. We did close right back above that 34.40 price support. Bull traders, dip buyers, they want to step in here. If you're a believer in a long term, if you believe Verizon Communications in the long term, and believe that Amazon will slowly just step away from attacking its next prey, we are at extreme oversold conditions here on the Wilder's Relative Strength Index, with already punctured zero line thresholds on the moving average convergence and oscillator here, with a massive amount of print monthly candle close prints below the oscillator histogram here. So just key technical momentum indicator damage right all across the board here. With even more significance is zooming into the weekly. We'll zoom into the weekly here, whereas you had a nice clean classic beautifully printed head and shoulder, a classic looking top on a split of that neckline. And what we ended up doing was completely back testing it right to the button. That was good for a 8.5% crash there. Just a very bearish front there in the weekly interval. And again, just a massive key inflection point. And usually when you have a bearish head and shoulder classic looking top, it usually ends in a landslide, a more forceful wave of selling. Whereas we have the moving average convergence bearish crossover with the oscillator there, and we're starting to print down below these red candle close below the oscillator histograms. Something to just watch out for. We'll go and dive straight into AT&T here, and again, off of a massive key inflection point here. Call it a multi-generational, multi-decade support. Right off the 1993 reactionary highs, reactionary lows of 94 through 95, 96, with reactionary lows off the dot-com bubble crash, briefly shy of touching the 2008 financial crisis lows there, and then ultimately the 2022 crash lows there. So just a massive psychological level to watch for. And again, bull traders, dip buyers need to step in right here, right now to defend this inflection point really at all cost. And short sellers, bear traders, they want to see a complete solid candle close below there on a move down to 1233 for a 14% crash, with a massive complete air pocket down below with hardly any support below that, down to 1075 for a 26% crash. So again, just a massive key inflection point. And we'll zoom in here on the weekly once again. And as you see, a nice clean head and shoulder classic looking top with a split of its neckline there. And so far it's been some prolonged selling for an 18.6% crash. And what I'll do is I'll zoom into the daily here, and we have a beautiful advanced bearish block continuation pattern, as good as you can get there, where you have your first solid daily candle close there, with waning green candle closes that chop just a little bit lower, with less powerful energy in between these candle closes, and snap. It just again has a medium probability of playing out for more of a strength move to the downside. So just another key inflection point to watch there. But again, monthly support is everything, and like I like to say, the longer term intervals always usually overpower some of the near term intervals. Going back to Verizon, I wanted to point out that the dual support here off that primary uptrend line off the 87 crash lows with 34.40, 32.33 needs to really hold. Again, just a big key inflection point, multi-decade generational support there, and it needs to hold. That I believe that gets taken out. You're going to see a stronger wave of selling down to the 27.62 price support, in my opinion, for a prolonged move, and then ultimately the 26.09 would need to hold really at all costs. Then yeah, I believe you crack that level. And I believe you'll begin to start to hear a panic selling, potential bankruptcy talk, and just a huge key damage inside some of the key components to the company there, in liquidity and debt issue, debt to income ratio. That's going to be a pretty big level to watch, in my opinion, especially the 32.35. So we'll see what happens. Just a colossal multi-decade inflection point for both companies going head to head with one of the biggest companies to the tech giant space.